Good morning, everybody. This is Max Farrow. This is DexFXMarkets.com. Sorry for the blank screen. We're just getting ready, and I'm running late. Go figure. Got to talking about the Dex Atomic and forgot what time it was. This is what happens, I guess, right? So let's get jumping in here. Hang on one second. Probably talking over myself there. There you go. Sorry about that. Got to get in. New share. Here we go. Hello, everybody. Let's do this as well. Let's start the video with my pretty little gab up here. Hey, everybody. Okay, good. So we are getting ready for some greatness here. So pause share again. I'm going to log into my account. We're about 5 minutes late. Actually, I usually like to do between 11 and 12 in trading, right? 10, 11, 12, 9, 10, 11, 12, right in that area, 1 o'clock sometimes. So we're running a little bit behind. Okay, we're going to jump right in. Let's see. Resume share. There we go. Oh, wait, I got to do one more thing. Do apologize. I have to invite some pipples. That's right, some pipples. Where's that at? So I hope you're having a great day. Today is the 3rd of June. Go figure. Lots of stuff happening. We are, all right, I'm going to pause the share here real quick. Stop share and come back here. Oh, there it is. All right, it's on. Stop lines, participate. What if I do that? I always wonder where they put it. I got to copy that. There we go. Now we're back. We're cooking with gas now. You have to bear with me. I'm inviting Chris to the channel here so we can talk and go over stuff. It's going to be a little bit longer of a video today. Let's get the ball rolling here. Because now we got to do share screen. Hopefully you'll be able to see everything. There we go. All right. Why don't we have the chat up? Got it. There we go. Chat seems a little cool. I like that they put the chat down here because now I don't have to look at my sorry little face so many times. All right. So running behind just a little bit. Let's check, of course, let's check the news. There doesn't seem to be. Here's the other good part about having, here's the news at 11 o'clock. Looks like we have a couple of things. In fact, let's go to our friends over at investing.com. I'll leave this space here. We're going to go, no, we're going to go to tools, economic calendar. And we're going to have a look. Now, remember, this is the NFP week, the non-farm payroll. And we are here on the 3rd. And here's just a bunch of news that happened from 10. The CADs sort of firing off. All these things are firing off here in 20 minutes. Crude oil, which also affect the CAD. Okay. CAD is usually like a, I guess you could call it a commodity pair, like the Aussie is affected by gold. This one's affected by oil. You know, there's a certain presence that I've always kept with the CAD as being what we call the prima donna pair. That's right. It always seems to fly around all over the place, even if it's the slightest movement of anything. So we're probably not going to be physically trading on Nadex today, but we're going to look at the market. We're going to see the, we're not going to be trading live, I should say, live money. But what I'm doing is that I want to look at the process of how the news does affect the solution here. We're going to go to the 1 hour master. Okay, and then we're going to talk about a theory, and actually not even theory, a strategy that we refer to as the Dex Atomic ATM. I wish I had the sound effects right there. I should probably put that in post-production. If you're watching this after the fact, there's a sound effect there. That's cool. It's like a big, giant, echoey, booming voice from the heavens. Let me see. Am I hitting? Yep. Okay. All right. Now, we had a fire off on the Aussie USD, and we're going to pop up into there. But again, there's sitting at 1400. Is that 1400? No, it's 1035. There's some information that's being released, right? Could affect the process there. Let's look. It's just something. All right, there they all are. That scared me. Here sitting at 6870 area. And then we have a little zone right around in here. Okay. I would like to say that this is another one right here. As you can kind of see, we're doing this bounce off. But I think what's going to happen is that this is going to stretch up. Let's draw this in. It's going to stretch up like this. And then kind of fold over just a little bit at this point. Okay, because it's going to kind of come out here and wriggle its way over to here. So we'll see if that comes true. That's where I basically see it happening for now. Again, not really going to trade too much into it. Okay. Let's have a look at some of the other ones. And a signal. Oop, drew all over that card. All right, Rook. Oh, I was like, why is that so close to the MA? Because it has a 9 on it, silly boy. Let's do that. Let's do save. Okay, good. That's why I keep messing up here, because that's supposed to be a thicker line too. Yeah, look at that. There you go. Back up and hit save. There we go. Where would I go into if I was going to see? This is another way to do paper trading with TradingView. Where would I find my best line at? Where would I find it at? Right there. This is the green line that's right here. It's probably my best bet, being off the tops and the bottoms here. It's sitting at 1227. So what I'm going to do is I'm just going to put a little line right here, just like this. And this would simulate the fact that I took a trade here, where I feel this one is going to end up going to, this is going to come back up and raise in, just like the Aussie. It's going to try to come back out and meet it at one point over to here. So we'll keep that there as well. But what I'm doing here is that I'm looking at the volatility at this area. You see, kind of cuts the heads off there. Big push, but this is the real beef where things are at. So where the first pseudo railroad track engulfing candle in reverse comes in from, right? Like it's trying to react back to get to the line, right? When you get these big pushes like this, the market tries to react to get back to the original intent of where the pair was going. This is what you usually see when you get a big push, right? When you get a really super big push, the market tries to get it back to where it was originally going. And that's where you're going to find when you get these big pushes that the market's going to try to get back to this area, okay? And even though that we have an arrow pointing up, we still know in those particular cases, when you get that big push, that you're going to get the market trying to come back to that area again, you see? So I always try to keep in mind when I have an arrow, is it on a big giant arrow or a big bar that is on that has a lot of movement? See, like this one right here, boom, comes way out but then shrinks back down and closes out. So the first 5 minutes of any trade is pseudo important, is pretty important, I would say, right? Because even though that if you were to get into a trade and say, I'm going to put this one here, this is going to be where my trade's at, or my statement price is at, could I still win? And at this level, yes, the answer is yes. You would have won that trade if you would have came back to here. Okay. Now, the way that we do trades is that we look at the value of the moving average, where it's at, how the market has moved. Okay. And we look at support and resistance, how price has been functional to that process, right? How price has moved during that time period. Nobody in chat. So when we get the arrow that appears, we have to make a decision. We're hunting for a statement price. Now that statement price is usually a strong indication of where the market will go to by previous reactions. Like this here, where's that market going? Why did I pick that level? Because the market came up, it touched that level and bounced off. And not just once, but there, here, 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 you see? So we're making a case on why we should be in this particular trade. And each time that we get some more information there is very important. So we know that if the price comes up, just like how we talked about yesterday, trading like the dailies, this pullback mentality, if it gets picked up, it moves on and does its thing, okay? That's what we're looking to do. That market, I feel, is like what I said, it's going to be coming back to this area. So it's going to test this, but then it's going to continue on in its variance to keep going up, right? Because it went all the way up. It's going to come back down and try to get back to that area of being here. All right, let's look at another one. There's another one right here. And GU, called the cable. Has some decent information, still channeling out between this 25.49 to 26, about 80 pip channel that it's still playing in, right? Kind of bouncing off, creating some, if we pulled the mean between these two, it'd be right here. And look at that, the mean between these two major channels is pretty strong, okay? The reason why this red-green zone is playing is because probably mostly this information over here. But if we pull tight into here, we can start to see that, yeah, it does have some smaller zones, like another mean in between there, right? It kind of shows that this is an area to get to. Boom, boom, and it sort of starts to tighten a little bit. Not consolidating completely. I mean, you could kind of look at it that way. It's consolidating a little bit right there, but it's not like a flag and pennant kind of consolidation. Sort of, I guess you could say that, but it's not really, right? It's just consolidation of the market trickling into a tighter zone so it can push out, right? Consider it like this, building pressure in a way, right? Does that make sense? Okay. Let's go in and kind of look. Oh, by the way, the assessment for that one. Let's put just so you could see it. I can already see it in it. I want to show you what it looks like with the moving average on it. And again, moving average isn't anything special, right? It's a built-in indicator. It doesn't really have a tremendous amount of worth other than a visualization of what the market is doing, right? Or already has done. So there's really not a lot of over speculation with the 50, right? When the price is hovering at that level, the signals become even more accurate when it's at those levels, right? When it's in a direction and an arrow is there, it's a strong process, right? And you'll have to make your own assumptions as a trend starts to form in the very beginning part, which you don't know about because you got this little curl and you get an up arrow with a little tiny bit of a push. These are where the success of the signals are the most. After you have a big move like this, Remember, big moves like this, the market's trying to come back down to a level. So you got to give these a little bit more girth. You got to give them a little bit more weight. Okay. After you have a big, huge move up, what's happening with most signals that they're coming back down, right? And at this levels, these ones are very successful. When you have a big movement up with no arrow and it's trying to come back down to where? It's trying to come back to the mean, to the average, to right there. Okay. Same thing here. We pushed up, progressed over. Is this one successful? The answer is no, it failed. Why? Because we didn't have a lot of information. If we went back to the top 12, like a counted dynamic one or counted support and resistance, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is the highest zone there. There's the buy. And there is the loss right there. Okay. Goes right there. So there is a lot. And now we don't know if that's 1 o'clock in the morning, 2 o'clock in the morning. You got the London Open, all that stuff. So there's a lot of stuff happening. So whether or not you take that trade or not, or you trade that period, my best advice to you, if you're going back and looking at signals, if you're looking and you're doing back testing on the signals themselves, what you should be focused on is your time period. Don't look at all the signals. Look at your time period. Choose your time period. Choose your process. You know, if you're using if you're using TradingView, beg your pardon, didn't mean to insult you. TradingView. I called you Traders Way. Find your time period. And again, if you can see down here, the time is there, right? So you know what your time period is, right? And if you go back, you just keep going back, you could draw on one particular, like mine is from 10 to say 1 o'clock in the morning, right? So I know that if I go back and I put like something to this, I do 10 o'clock to 1 p.m., right? And I say, what signals are in there? Well, there's a signal. And I go to each one of my charts. I don't have to do this, put a box down. I could just go to my chart and look. You know, if I were to take the signals from there, I would have won that one, right? And you can go to each chart or each day, okay? Real simple scroll. And what you're looking at, so I'm one in, you know, so that day I got 1 off of that one, right? June 1st, so that's June 2nd, right? June 2nd. Now I'm going to go to June 1st and I'm going to look for 9 o'clock. I'm going to look from 9 to 1. There's 9. There's 10 o'clock. So trade, boom. And 12 to 1. So there's 2. So, and would have won. Okay. Don't know if I would have taken the 1300 one to 2 o'clock, but that's a possibility. But again, if I just take from 9 to 12, those 9 to 10, and then 10 to 11, 11 to 12, those 3 hours of trading, how many would I win? Right? I wouldn't have taken this one because it's 7:55. I'm still sleeping because I went to bed at 7. Right? All right. So if you paper trade, you can go back and do it in that fashion. You can go back and look. Don't look at every single arrow, because then you're like, well, if I stay up at 8 o'clock to 8 o'clock at night or 10 o'clock at night, that's one thing. But if I can't trade at 2 o'clock in the morning because I'm on the East Coast, right? If you're on the West Coast, you might be able to trade a little bit more. But keep in mind, trading later on outside the prime hours from 8 to 3 o'clock, 3 p.m. Eastern time, you have the secondaries, which are the secondary Nadex structures that don't have intradays after 3 o'clock. Then you have the market on how much what you can trade, right? So try to pick a time that you can physically do it. If you can do it between 9 and 3 p.m., 8 and 3 p.m., you got much more opportunity, right? Okay. Let's get this part finished. We're going to go look and just jump into, this is the 1 hour, right? Yep. See if there's anything else. The GJ is there. Oh, no, it doesn't have one. Okay, this one does. We already have a good zone in here, so I would pull from right here as the trade. But again, there's news coming. There's heavy news coming. But if I were to trade, I mean, you could jump into a Nadex page and see if you had money on it and all that kind of stuff. But this is just as effective for me, just to kind of look at the possibility. If you're just starting out with trading Dex Atomic, then trade that, trade that and demo and practice, no matter if there's news or not. Get a feeling, get a draw, get a understanding on how to get the pairs on fast, all that kind of stuff. And whether or not it wins or loses at that point is an effectiveness of, should you have gotten in, shouldn't you have gotten in? It should only be an assessment of about 3 or 4 minutes, right? You shouldn't take hours to assess, oh, I wish I should have, could have. I'm going to pause the share just for a quick second so I can fix something. Okay. Let me resume the share. Okay. Sounds like we got Senor Chris upon us. Hola. Don't know if he can hear us yet.
Hola.
How you doing?
Yeah, lousy. I'm doing all right. Thanks, and yourself?
Doing pretty good. You're live on air.
Oh, okay. Yeah, I couldn't get into YouTube. I got a lousy connection this morning. So.
Oh, I hear you. So you're probably having a hard time connecting now. All right.
Yeah. So, but I'm on. So I guess we're live. So.
Mm-hmm. All right. So we're in talking about the movement of the pairs on the secondaries and the prime and the masters of the systems in there. So we have a lot going on. We're not doing any major trading this morning in this particular time period because we are chock with some CAD news, some oil news, some other things noise. Again, this is the week of the NFP, the non-farm payroll. So we're not in trading directly. What's that?
The NFP.
Oh.
Still abstain. Sorry.
That's all right. All right. We are into a next part of our segment here is I wanted to talk about the process of strategy. Okay. And no matter what the strategy is, we have, I'm going to do a little quick share here. We're going to do it on this particular page. Be prepared for another cave Maxx drawing. I think my son says, those cave drawings. So you see, he sees me when I do it. So he's like, you're drawing on caves and stuff. All right. So the idea of the strategies that we normally have come down into a couple different things, right? We have price action. That's the main strategy that we utilize. We utilize a support and resistance area, right? So when a particular signal happens, we say, okay, if this is a buy, support is down here, resistance is up here, and it looks like because we're buying in at this area that this would be our statement price over on Nadex. Okay. Now, in order to get this particular statement price on Nadex, the price has to be pretty close to it. So if it's all the way up here when you're using the signal, you're probably not going to get that price. When a signal first comes out, okay, you'll see a bar like pseudo like this, right? Or whatever, a bar here, and it'll be, the arrow will be on this particular bar, right? The actual signal, if this was, say, it depends on what bar this is. If this was a bear bar, it'd be red. The signal would have actually came out down here, right? Because this is the close on a bear bar. On a bull bar, the close is up here, okay? So when the signal comes out, you would see something like this when it first comes out. Now, you probably see a little blank thing right there, or it would already started moving, or in one direction or another, right? So we all know how a candlestick works, is that this is the one end is the close or open, and the wick is the high and the low of the bar, right? So how far it went to before it shrunk back, depending on what color it is or what direction it closes in. If it closes lower than it opens, it's a bear bar. If it closes higher than it opens, it's a bull bar. Okay. Little quick lesson there on how candles work. If you don't know how candles work by now, then you probably should go to a different channel for a little bit. You don't want to see what's about to happen. Okay. So when the signal comes out, we're just going to assume that this is a bull bar. Okay. We're going to call this a bull bar. So the direction for the signal is going to be like this. You'll see that arrow. A strategy that can be utilized is what we refer to as at the money. Okay. So at the money trades can be very, very successful in the concept that they can be successful and stressful at the same time, because it isn't about getting all winning trades. It's about winning more than you lose, but a certain specific amount before you lose. Okay. So when the signal first comes out, what we normally do, okay, is that we look for support levels on a buy trade, something to like this effect, right? Then we look for this as the support price and say, okay, we know that if the price, if we get a bull bar up here, that we want to make sure, there's a certain percentage of success, 70, 80%, 70, 80% success, 80+% success. Okay. That you want this price that, that it's not going to go past that price. That's not going to drop down and we're going to lose, but you have 80%. Still means you got about a 20%, 15% possibility of loss at that point. But we want it to be 80% or more success, because we're usually buying the contracts for $25 profit. That makes sense? So when you're buying them for $25 profit, you really do want a 75% success or more, because your risk is $75. Now you're risking 3 to 1, right? In this process, and it's flipped, right? So if I risk 3 to get 1, this is the mentality that we use right now when we put a statement price or a working order on for $25 in this particular case. I'd never take a trade less than $25 with a profit when I'm trading the regular solution for Dex Atomic. Okay, now there's some times that I could get a price of $30 because the market's come back down closer to it, or the lines that I have for support that are really strong are a lot closer to the open of the signal than normal. So I could probably get maybe $25, maybe $30 or $30 to $35 in that case. If I'm up about $45 to $50 in that case, I'm really what we refer to as at the money. Now, when the signal first comes out and the statement first comes out for Nadex, okay, when you use at the money mentality, what you're doing is that when this price first comes out, the market prices on Nadex are sort of like 45 and 55, right? So if you were to take a sell, because there's usually what they call a spread in between the two, okay? Usually $5 to $6. Now we'll go over to Nadex and I'll show you what I'm talking about here. So if you were going to take a sell, you would be risking 45, you'd be risking $55. And of course, if you were taking the buy, you'd be risking about $55, right in that area, 45, 43, right in that area, right? Or however much for profit. And that's when the signal first comes out. And immediately, if you were to take the statement price right where the signal comes out, you would be taking what they call an at the money trade. Now, with doing this, what success rate do you need when you risking $55 to make 45? Let's ask the peanut gallery. Anybody here? Chris, you're the only one in the room. Maybe you can pop out, tell me what percentage rate do I need to be successful and above. He may not be able to come out because he's delayed.
Nope. I'm here. Would you like me to use Common Core or?
Use Common Core. I don't have that much time. Go get yourself a chalkboard, 6 pigs, and a piece of corn, and we'll figure it out. But
Well,
okay,
but I think it's, what is it, 65% success? Or actually, it's a little over 50, right?
well, here's a very easy way to figure out what percentage rate do you need to be when you take a statement price, right? What percentage rate of success do you need to be to break even at a process, right? To break even at any process is how much you risk, right? On Nadex. This is just on Nadex. It's not in Forex or any other trading mentality, futures or indices or anything like that. But on Nadex, when you take a trade that you risk $55 on, you need a success rate of above $55 or 55%. Because the market value of any one trade equals $100, we can then transpose 100 into percentage, and every dollar is 1%. See, little cheating way to to see what percentage rate you need to be. All right. So if I get to this trade and it says you got $45 profit margin on it, I need to have a success rate of 55% or more to break even. I need to have it at about 60% to make a good winning trade allotment. For every 10, right? I need to at least be winning 8 of them, right? Or above. Or not even that. I mean, it's, and I'll show you here on some testing that we had done. What I'm trying to allude to here is that there's a bunch of ways to trade. If you trade what we call out, in the monies, ITMs, they're deep in the money, right? Or they're pretty close, and the market comes back to take it and it goes off, and it has a large rate of success, 75% success rate at that point that you could have to win that particular trade. Okay, 75% or more. When you take at the monies, you have an opportunity that you only need about a 55% success rate. And if you take OTMs, to where you say, okay, it came out here, the arrow is up, but I'm going to take a position here because I think it's going to go up from here. And I'm going to take this position. And let's say you buy them for $75 worth of profit. Then you only need a 25% success rate. Get what I'm saying? So, and this is OTM. Now, at any level here, let me show you why that's so important, is that when you have the different risk to reward ratios, right? Risk to reward. And if I'm risking $75 to make 25 and I lose one, it puts me in a hole $75, right? How many trades do I need to make back to break even? 3, right? So I'm risking 3 to make 1. Now, if I'm doing this, I'm risking, I'm risking 55 to make 45, because you can get $50. There is that possibility. And the average is usually about $50 when we do them. And I'm going to show you proof of that here by looking at David Menning's and mine analysis that I've done. But when you're at this level, how many do you need? Now, you still probably need 2. You need, if I lose, I'm going to lose $55, but when I win, I'm 45. And I only need to do 2 at that point to get back into making money, but it's doing pretty well at making money, right? I still won $35 at that point when I do 2 back, right? Even if I do lose, I'm only losing $10 in the hole. I'm minus 10 instead of minus 75, right? If I would do 1 here, I'm still minus 50. So it's still stronger. If you were to do an actual 50-50 and be a 1-to-1, you would only need to win 1 back to do 1. Now, of course, there's fees and there's all these other little misnomers, Tim. There's percentage rate of successes, all that stuff. But in the ultimate goal here is, how do you get to this 1-to-1? Everybody hunts this out. I've probably gotten thousands of phone calls over the 7 years I've been doing this of, hey, Max, you got any ATM systems going? I was like, yeah, it's called the clock on the wall. At 3 p.m., go to the Euro USD and buy it at the money. Which direction? Pick one. You'll have a rate of success. You see what I'm saying? So there's a mentality here. It's when you have this kind of ATM process, okay, an OTM process, an ITM, right? Your rates of winning are going to be massively skewed but if you were to have these rates of winning, the money you're going to make per contract is going to be big. It's good or overall, right? So in this one here for ITM, you need to only really trade maybe twice, right? And here you're going to have to trade 10. And here you're going to have to trade about 30 times to get to the same level. Okay. And what I mean by that is that here you're going to make $50, right? But here you're going to make money, but you're going to lose a bunch. You're going to lose a little less than half your trades. And you're still going to make 50. And here you're going to lose a lot of your trades. Okay, but you're only losing a very small amount, but it's still going to come out to be 50. It only depends upon now your mentality, right? If you're okay losing a tremendous amount of them, but man, do you like when you win the big boy, right? That one that's $75 profit and wipes out all those other ones, right? Because now you're only risking 25 to make 75. You see what I'm saying? So the mentalities are, there's several different ways to make the trades happen. It just depends upon your mentality on how you want to survive it mentally. Okay. And I'll show you what I mean. And we're going to stick with the ATM. And we already know the ITM system of where to go, where to drop down, use dynamic, use counted, use that stuff. But I want to show you now and the progression of what we have found. Now, this is only working out of the box on the 1 hour trade system, the 1 hour TN, the 1 hour atomic. Don't try this nonsense on the 2 hour. Don't try this nonsense on the 5 minutes or any other crap like that. I want you just to focus on the 1 hour trades, the 1 hour trade system in here. Let me pull up the processors.
Hey,
now,
Max, are you recording?
Yes. Yeah, I'm recording.
Okay. Just check.
So what we do is I'm going to pull in real tight here so you can see. Let's see if you hold control down where you're using the Dex Atomic on TradingView, it'll keep it in line. There he goes. Okay. So what we do when the signal first comes out, remember this bar is where the signal came out and it came out right here, right? And when that signal comes out, we get a price on Nadex right at this level. And what we're hoping on is that when we get it, we're getting it for like $50, $45 to $50. Okay. Even if it's, let's just say 45, we're going to stay with that norm, $45. It's terrible to write on this thing here, by the way. And so we want it to continue to go up and just be above this line. Again, this one may be a winner because it's going to be above. So we'd win 45. This one right here came out up here, and that's the statement price we would get. And clearly you saw that it lost. So you'd have a loss. You'd have a win. I don't know what just happened. That was weird. Oh, when you hit spacebar, you go to a different, you go to the next pair in the line, I guess. Which one was that? That's so weird. Ripper and pound, JPY. Okay. It was the euro. Get that bugger back in there. I think that was it, right? Don't want my things being all messed up. Okay, so let me, so we had one win, we have one loss. Pair came out here, finished out down here. That's another win. So that's 2-1. We won 2, we lost 1. Here's where it came out right here. I don't know. 1 up here. So 3-1, 3-2. Here's the one that came out and it lost 3-2. Okay. And in this fashion of going out and counting, we get a mentality like this. So Sunday night, this started, what was Sunday? I did testing to the 31st, the night of the 31st, starting from the night of the 31st to last night. This was testing just to last night, not until this present moment here. I tested the Aussie USD, just like I showed you right there. Went back and looked at what ones would have won, what ones would have lost, because I know it would have gotten in. I don't have to worry about fill rate, okay? Because I know every single one's going to be getting in because we're getting them at market price, okay? And how do I know that that it works? Well, because I have somebody who's testing besides me, and this is David Menning's chart. You can kind of see already, even this morning, he's in doing a whole bunch of trades. Now look at this. He's vibrating at a 60% success rate, okay, during his time period, and it's working. It's working because he doesn't, even if he does lose one, he doesn't need too much after that to make that money back. So one, and then the second one, he's way into profit. You see? So he doesn't need much of a success rate to be just successful. When does it start to go really awry is right at that 55%. When we use a 45% profit margin and 55% or a $45 profit margin and a $55 risk process, you only need 55% and above to be in the win column. Okay, doesn't take much. So this is also, if we would have taken every single arrow that came over, there's going to be certain time periods that are more successful than others. Excuse me. So there's a mentality here that at the money, what does it look like? So if we were able to take every single one, yeah, that would be crazy. You know, this is crazy, but this is David Menning. He's taking just in his time periods. He did some last night and he did some yesterday morning. So he's taking them when he can. But the beauty part about it is that there's not a lot of brain power going into this thing. It's just heavy movement, quick. You got to be quick, right? You may not get into all of them, but you got to be super quick. You know, it might even be better to not even use this because I got to flip around. You may have to use the text. You might need something even simpler than the trading view side. You might just have to be able to pull into Dex Atomic on the site, pull up to the 1 hour, and watch how fast this is. No signal, boom, Audi USD. No signal, Euro Great Britain pound. And if you're trading in a prime time area, you'd be using that, right? You'd be using that solution like that. No signal there. Euro USD. And just as fast as I'm going through them right now, well, I say no signal, but there was. This is the signal there. So you have to, bear with me. We would go down that line and we would simply say wherever the pair is at, right? Let me see. Let me go back into the Euro USD. Wherever the pair is at right there, I'm taking that particular price, right? So I would look to see what is the price at now, 12.13. And then I'd hit Nadex. I'd have Nadex up in my screen and I'd hit 12.13, whatever it is at market price, as long as it's above $45, 40 to 40. I'd say $40 to $50 right net margin because it can work to a 40.60. But remember, the less you go down below there, the more success rate you have to have. And we're vibrating right around 60 something percent, 63% in some cases, right? David's hitting 60% on his side. I hit a total value of 63%, but that's with all the markets with a crazy GU that works out pretty well, right? It seems to work on the Great Britain pound USD extremely well at 80%. The UJ, the yen, his sushi is pretty strong there too. Okay. So other than that, with the other big runners are 66% there, 65% there. Great Britain pound. I don't know what. Oh, that's supposed to be the E. Yeah, I like that. Sorry. Okay. Those seem to be working out pretty good, but every single one is above the 55% success rate. You get into the 2 hour. I started testing the 2 hour and it wasn't as good. There, I didn't even finish testing the 2 hour. Okay. So there's a process here. Now, if you're not comfortable with losing, if you're not comfortable, here's David Manning, sort of like the 5-minute trades. Okay. Right. Oh yeah, great. You answered in the chat room. I appreciate that. Free in 2339. Yeah, 60%. You really need about 55% at that level. But yeah, you're right. It doesn't take much, right? It doesn't take much from that mentality of trading, right? So it doesn't take much to get onto the site, get those 10 pairs flying off, right? They're right here. If you're free, listen, if you're a free member right now, what do you have to lose to try? What do you have to lose to test? You don't. You don't have anything to lose to test it. People are going to say, well, Max, that's in demo. Just try trading in demo. You're absolutely right. It's in demo. I'm not going to try something like this in live just yet. But let me tell you, if I isolate a variable from 9 o'clock to 1 o'clock, and I take every single arrow that comes over and I have a winning percentage there, if I just take one, okay, let's take David Menning's process here, right? This is David Menning. He's a trusted client, somebody who came with us with no previous knowledge of trading in this fashion. He may have had trading knowledge before or what have you, but he learned from us of this particular product of the Atomic, right? And he trades the Atomic. Listen, he's got like a 90 something percent, 90, really high 90s% success in the regular Dex Atomic when he buys them for $25, $30. And he does very well live, real money. Okay. No joke. Excuse me. But the concept here is that when I proposed this out into a chat room, into Facebook yesterday, into a group, he jumped up and he's like, let me test it. There's others that are testing it. Don't get me wrong. There's others people that are in testing the process, and they probably have the same similar success because I have it also. But I didn't want to show you just mine. I wanted to show you what other people that have. He's not getting paid for any of this other than him doing what he's doing for us. He doesn't make any money from us directly. Okay. He makes all his own money, however he makes it. But I want you to look at this for a second. This isn't some 6 weeks travel, right? This is 23 trades starting from yesterday at 4 o'clock to 5 o'clock, right? And then he did from, 7 to, boy, he was really burning the midnight oil there. To 10, there's 10, there's 11, there's 10, there's 11, 12, 2 and 3. What are you just up all, you must have got excited. Geez, you stay up all night, buddy? I think he may have. I think this guy stayed up all night. What? That is amazing. All right. Because I'm not really seeing any. You set your alarm or something and just, I see what you've done. Awesome. All right. So, okay, you went a little crazy here. That's fine. That's awesome. I love that. Right. But still, it doesn't really matter because that's his timing, right? If he's at home, then it's his time, whatever he does. Okay. But even if I were to isolate a variable from 8 o'clock in the morning to say 3 o'clock in the afternoon, the most precious time of the masters having the most available trades at those times. And we're going to be providing information on the temperature of how things are working out by this variable. We're going to make a system now, okay, that's going to drive a lot of this process for us. We're going to drive a lot of information to data collection under this theory. And we're going to kind of keep, a running. I really have to make this work. This is probably one of the most important processes because here's the thing. When you're trading, let me pull up this solution here. When you're trading this mentality of coming in and you say, and if I trade it regular, how much thought do I have to put in? When I'm trading it regular, oh, I see the arrow. Okay, there's the support. The speculation of support is usually, okay, maybe I can go here because it's that support's down too far. You know, maybe I can choke it up here and come to here because of this support right here. Now, because now this is support. Yeah, this is a good idea. Let me do this one. Okay. Or when this signal first came out, it was probably, let's do something right there. Right. And it went up, came back down, got filled and went on. This is a winning trade in the regular Dex Atomic. Right. So, but that's a lot of thought. That's about 10 seconds worth of thought, 20 seconds worth of thought. It's still not a lot, but it's a lot compared to where did the price come out at? Right? There's an arrow, get to the Nadex. There's an arrow. What's the price? 12.13. Great. Hit Nadex 12.13, somewhere close to that. Okay. And then go. You're looking for $40 to $50 in profit margin, and off you go. Get where I'm going? So the other solutions that we have, okay, that you trade with, that you work with, are OTM and ITM, right? So you have OTM, ITM, and ATM. And at this level, this is what we're going to be utilizing to find some people who want to trade in this mentality. I'm not going to create a bot just yet that does this automatically, and we attach it to the ZDON. Yeah, there will be, I think there might be a proven effect here so far. This is only 1 week's worth of data. And if we take David Menning's numbers here, these are all single contracts. This isn't some sort of, oh, well, he had to double up on that one because he lost that one, and he doubled up on that one to do this one. This is all just still one particular trade, or one contract per trade. You see? So it isn't like he's got to do anything super special either. Excuse me, I have to wipe my hands. My wife handed me breakfast and I have to kind of get going now. But the concept here is, if this is 1 day's worth of work, even if it was 2 days worth of work for $342 for one contract, 23 trades, it just becomes about the numbers. If you're in chat, David Manning says he couldn't sleep. I don't blame you. You couldn't sleep because you were overthinking this, or you were thinking this process to the David Manning level, apparently. I get it, right? I understand. So if you're watching this, even if you're online with me now, Chris, the idea is to learn how to effectively go from chart to Nadex and see that process. It just becomes a process. It's like looking at your watch to tell what time it is, because the numbers are there. The money is there. So the process is there. Yeah, buddy.
Just in review. So you're saying that you're not even looking at structure or anything like that. You're just looking at that signal goes out, you see it, and then you go straight over to Nadex, determine what the price is. Is that what you're saying?
Yes.
Okay.
That's it. And the reason I'm saying that is because
it's a whole new, that's a different mentality than
oh yeah,
kind of used to, right? Is
I know.
Also saying
there's not a lot of premise to. I've removed all the moving parts. You know, all the moving parts where stuff could really go wrong, and it's just a matter of, okay, well, this is, you're going to have good moments and you're going to have bad moments, right? But the overall value from what we see is that the good is outweighing the bad. And if you have a good buying power, right, you wouldn't be able to trade like this. This is more probably the style that you could trade at, right? Not saying that you would do a David Manning and stay up all night because he couldn't stop thinking about it for whatever reason. Let's see if that's what he said. David says, free in 2339 says, how many winning trades and how many losing trades? Here, I'll show you right here. 14 wins, 9 losses. When he's losing a amount about 55. See in here, it says 55 minus 55. This is for a buy. So he risked $55 to make 42. In this particular case, he risked $56 to make 44. So it's right in between that $42, $45. Now this is after fees too, by the way. Okay. Here he made $50 because he was able to get in. Maybe the price was going against it a little bit when he first got in. Might run a little bit late. Here's a couple of them that are on at 8 o'clock, or 2 of them that are on at 8. But again, he may not be going after every single one. Keep that in mind, that this variable is dependent upon your ability. So if you go through 3 and you get to the 4th and man, it's moved way against your mark and you don't have time, but you could actually, for every single pair that you go to, you could run down each one. And if it's not at the mark of $60 or $55, put a working order on at the monies. If it's out of the money for you, put a working order on, or take it market value at that point and take at the money. There's a position, a higher position. The more that you're buying it out of the money, the less you're going to risk, but the more you would make if it wins, if you're running late. And if you're running late and it's in the money, but it doesn't have a lot of profit margin on it, put a working order on for that profit margin and see if it fills, and it could come back to fill. You got nothing to lose at that point. It's best to try to get.
Nice. It looks like,
yeah,
it looks like Dave is within, looking at the times, he's within 3 minutes. He's got a couple of 5 minutes on here, but so what you're saying about being quick, you got to go through the pairs. You got to check all the signals. You're not wasting any time at all.
No, you're sitting in your computer.
2 minutes, 42 seconds.
Yeah. You're sitting in between, you're sitting in your computer. Okay. And this is 1609. It was a little late, right? But still 02, 05, right at the, like 42 seconds. He was like on the money on that. That's probably the first one, Auto USD. Absolutely. Right. 01, 03, 03, within the first 5 minutes, he's kicking 17 minutes. So no contribution to 17 minutes in, and there's a loss there, but this is also, he scalped out. So I think there's a couple of them here that he may have scalped out on and practicing doing whatever, right? Whether or not they lost full or what have you, the number would only change by about $40 here when I was checking it last night. As far as this morning, it doesn't look like he scalped. There's one that he scalped out on the process. So he would have lost 20 something more dollars. So, even if this was $280, it doesn't really matter, because for one day, one contract, $280 average. If you sat in front of your computer for over a 4-hour period, maybe again, you come in, you make these trades. You don't care if you're coming back and they're winning or losing. You don't care at that point, because you got them at such a good number. There's a process there. You're just coming in, getting the number and going. Come back at the top of the hour and really don't even try tallying up until the end of the day, the end of your session. And then tell me if you're successful. If you're watching this and you're a free member, you should be like, oh, he's using working orders at times. Okay, that's cool. 15 to 10 now. 15 to 10. And I guess we just dived in. I don't think he's put him up there for today, but 15 to 10 for the process. So whatever that comes out to be. And that's big. That is really big, because at 15 to 10 here, I'll just simulate it here. I can move those back. Right, just for the process, it doesn't look the same, right? So because there's different monies being traded on those ones, right? But if you just did them straight over with no scalping, 15 to 10, you got about 25 trades happening. You should be pulling out about $125 at that point. But because he has them at different levels and he's probably getting some OTMs in there, and he has less that he's losing at times too. Okay. So this process, even if I traded this 15 to 10 over a 2-day period, I'm still winning my money. Now you may be like, well, Max, that's not a lot of money. You know, that's only $125 a day, you know, or $280 a day that David Menning won, or $300 something, right? How much did he win for one day? 342, probably be 390 now, right? 387 or somewhere in that area, right? And if that's the case, 387 for staying up all night. If he was doing that, how does he make 700 something? He trades 2 contracts at a time. Maybe takes a day that doesn't have a lot of news. You could trade and make your goal in one day for your entire month's necessities using an ATM strategy like this. Now, there's a couple other strategies on board that we started to put into. I went all beautiful mind last night. I started to look at the market, and I started to say, okay, on the ones that it kind of loses, you know, I don't want to stretch and be like, only get it if the market's moving up and the direction is down, and over the last, there's so much more thought in there now, right? If this is the system in here, then let it be. If this is what works, let it be. The value of coming in and picking a support and resistance area and all that stuff, if you can handle the losses, you can handle the profit. We used to tell that we used to train Trader's Mind, and Paul Davey could really jump into this one. And I used to have it to where in trading 5-minute trades, you used to come in within the first minute, buy it at a particular price. And when it made $1 profit, when it made $1 profit, you got out, or however much it was. I forget what it was. When it went up a certain amount, you got in at a particular time, you got out at a particular time. So 1 minute in, 2 minutes in, you were out, right? Whether it was win, lose, or draw, like had profit on or didn't have profit or what have you. And some were, you know, made $6 or I lost 10, or made $14 and I lost 4, you know, but it got you that losing mentality. It got you that mentality that, you know, it's about the numbers now. Right? We know that, like playing baseball, every at bat is not going to lead with a home run. If it did, then you'd be some sort of freak, right? So they know they're going to have strikeouts, but they know their averages are going to be better, and it keeps them on or what have you. The analogy is kind of ruined at that point now. All right. Chris, you got any questions?
Yeah. Well, not really questions. I guess we need to come up with a name for the strategy, perhaps, but also for the new people that are coming on with this particular method. Would you say this is a good place to start, or should they go through the training on how to trade, or kind of just give me your thoughts of, is this a good place to start for somebody coming on in the free system?
Well, that's where the argument has to kind of be made by the individual. So the level of knowledge to have of visualization of support and resistance, a lot of the work's done for you, right? Even if you show up and you come to this chart, and this is the first chart you see, if this is the first time you ever seen this chart, you learned what a candlestick was in training, you learned what the arrows were, you learned what support and resistance was. 90% of the work is done for you, except if you're using dynamic stretch level, right? So if you're using dynamic levels, you begin to be able to see that almost immediately. What did that take? A millisecond, right? But you're visualizing what levels you wanted to be at, seeing what it is during the mean, learning these things. That's still 1, 2, 3, 4, 5 things that are done for you right there. When you come here, learning what that is first should be important to you, because you don't really understand the win-loss mentality until you get in and really start doing it. right? But there's also an argument to say that the other has less mechanical moving parts. I just wait for the top of the hour, and if there's an arrow, I go at the money, and I'm done for the day. So which is the best? Well, that's really going to be up to you. If you, excuse me, can mentally handle the losses, right? Then you're going to be fine. If you can mentally be disciplined enough to only trade one contract at a time while you got if you have $700, see, this is the other thing too, is that your balance has to be able to withstand the process, right? You got to have enough. If you have 10 pairs up and let's say 5 of them hit signals, that's $250 worth of $230 something to $280 somewhere in, right? Let's see. 9 times 55, $275 worth of risk you have on, but you got 5 trades on. Now, out of that, you got an opportunity that you're going to lose 2 out of that. There's a possibility. Even if you won 5 and lost, or if you won 3 and lost 2, you would be breaking even. But if you won 4 and lost 1, you'd still be okay. Right? Did I do that right? Use 180 minus 2, which is 90. Yeah, you'd be at $90. Or 1, you'd be at $90. Less than that. So you'd still be okay. But that's in one session. But you're still losing. Even if you lost 3 of those 4, even if you were upside down in that one trading session, right? Which I'm sure that there was probably 1 or 2 trading sessions, you know, maybe there was an hour that did really bad, right? 9 p.m. Let's see, 9 p.m., 9 p.m., 9 p.m. Here's these 3 right here. Look at this, right? This is the 9 p.m. hour of last night. He won 2, lost 2. Right? So in that case, 49 plus 43 was 92. 48 plus 52 is 100. So he lost a total of $8 there in that one session. So it was a minus of $8. But 1 hour later, he's back in profit again. Right? So he lost $8 in that session on that hour, but in this hour, he made money. Right? And made up the money that he lost previously. And then another hour, this one, he probably came out less again, but then an hour later, wins $42 and clears that debt out. And there's another one, and another, and another. And again, trading to that level comes out okay. Doesn't mean that even if you picked a really good pair and said, okay, I'm going to trade, and I'm going to trade as much as I possibly can on the one pair, and I'm only going to trade that pair. And if you traded the entire week, you made $545 per one contract. You traded the entire, when I say the entire week, folks, I mean from Sunday night to last night, Tuesday night. So Sunday to Monday is 1 day. Monday to Tuesday is 2 days, 2 physical trading days, $545. $22.90 if you stay up and do a David Menning all night, just start drinking no-dos. All right. The name of the system, the Dex Atomic ATM, has multiple indications of it's like automatic money machine, and you know what I mean? But it's at the money. And we'll probably even make the A, the T, and the M and the atomic highlighted.
What now? When would it make sense? Would it slow you down if you use the signals to see which pair fired off, or to go through the charts, or go back to the signals page?
Don't involve don't involve the signals at all. Okay. Don't involve the signals.
I'm asking because we'll probably get asked that question. So.
Well, there's the answer.
Putting it out there.
No, do not involve the TNT signals at all. The TNT signals are a different mentality of signal that uses a variant in the process. So don't use the TNT signals as the at the money process. You have to come to the chart. You have to see on the chart that there's a trade there. And I want you to be able to do that. I want you to be able to see that. Now, eventually, of course, as we're putting together the Dex Atomic mentality, writing the code for this to work was exhaustive, right? Because a lot of where the arrows and the support and resistance comes in is based upon some numbers. You know, we have Fibonacci, we have pivot lines, we have a whole bunch of stuff that is speculative to the market and its reach for the market, previous market values. But when we're trying to put the information in on what pair to take dynamically, it is damn near impossible. We try to use the count direction, you know, where we go back, or count support and resistance, you know, where we go back over a period of time and grab the high and the low. And that's our support and resistance for that area, right? So from here to here. And then to fire that signal off for that process to be, that's the statement price for this is the signal and blah, 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 right? But now, if it's all just about the numbers, taking the temperature of the market, then what we have coming now is that I can write that in about an hour. So it fires off a signal. I'm going to turn this into an alert. I'm going to make a solution that is going to turn this into an alert, and we're going to see if it won or not at that point. To build this next part of the bot and next part of the systems is that I have to prove that this system is going to work this way. You know, how many trades does it win against that commonality? Now I'm trading it like 4x. You see what I'm saying? So there's a shift coming, and the shift is there's a lot of thought to do the process of using the regular Dex Atomic. And what is very important to me is to make sure that we do the data correctly and we get the information properly. And we don't try to overthink it. I want to thank Chris for coming out today and hanging with me. Him and I have a lot of work to do. If you're interested in helping us test out, then just reach out to us in the Facebook group. If you're not in the Facebook group, get in the Facebook group. If you're unsure, reach into the chat on the website, reach out to us in support. You should be in the Dex Effects process all the time anyway. You should be in here, you know, waiting for new stuff to come out. If you're not a part of this, you should be subscribing to the channel, all that kind of good stuff. These numbers are real, by the way. This isn't some sort of gimmick, right? This is real stuff. We're not looking to mess around. I'm not looking to sell you a bill of goods so I can get you to buy something. Christ, the majority of you are free here. David Menning's paid a lot of money to be here and do a lot of stuff. He's bought a lot of stuff with us. He's a very trusted member of this network and our clients. So we wouldn't give him this opportunity if it wasn't. But the majority of you that are watching this, even after the fact, you're free members. You could go in right now under your free membership and hit your Dex Atomic charts and do this exact same thing that we're doing and make a ton of money, and I could never hear from you. But if you do that, that's gonna weigh on you. If you end up going in and you make a lot of money, you do well, congratulations. Throw us a bone. Hit the donation page. Throw reoccurring in there. Buy a package. Be a part of the solution. Because the more you help us, the more I can develop those things that will, could you imagine developing the bot that trades this for you automatically? We already have the Zedon system. Why couldn't we trade this to where it trade every single one that came over? You would go from this to this, right? I'm not saying that that's going to be, you know, and how do you make 3 times that amount? Well, I'm pretty sure Nadex would kind of lose their mind on us at that point. You know, 1,000 people over there with a thing that's making $2,000 in 2 days? I think so. So we have to get ready for what's about to come. And I appreciate everybody who's hanging out with us. Let me take this on ad nauseum. Chris, you got anything final statements to bring out before we head out?
Yeah, just one thing for everybody who's listening. The key to this process, just get started.
Mm-hmm.
Get your Nadex demo. If you're brand new to Nadex or whatever, get your demo account going and just go in there, trade a contract at a time. But here's the key to your success. Just get started.
That's right.
Get in motion. Get into the game. And once you start understanding, you'll actually enjoy it as well. That's all.
Well, you'll enjoy the progressional value of seeing your account grow, right? You may get frustrated because you're like, oh, no, I lost that trade. Oh man, that sucked. No, stay one contract at a time, stay the course, carve out your tree, make your sculpture, but do it systematically. You got to find consistency. Remember, P plus D equals C and C plus V equals G. If you don't know what that is, go look it up. Go look up what that is in our system. Consistency plus volume equals goal is one of the strongest solutions we have ever come up with. And these values, this 2290 isn't some made up value of, oh, well, I don't think I would have filled. It's not like dailies where they have a percentage of fill rate of like 20% now, 10%. This is 100% fill. If you were to get there at the exact time to be able to do that, they will fill 100% of the time, or 99.99%, whatever. Okay. And with a 63% winning ratio or 60% and above, easy. Yeah, you may have pairs that fall below that, but this is the only one. The GJ is the only one that was on a losing factor so far that I have found. And even if you were to absorb that for the simple chance that could come back around, if you track your stuff, if you do a spreadsheet that's strong enough, and we'll find a way to make this even easier for spreadsheet tracking. But yeah, you just avoid that one. And if I take that one out of the equation and just put that over there, look what happens to my numbers. Right? And even though this was only 59%, it still added value. This is the only one that took away value. And if that's all you do is just take away that value, but even if I had it in there, even if I traded it, I'm okay with that. And later on, you could, with a bot, be able to take out which ones weren't working well. Now, with this bot we're going to be making, we're going to have to make it very exclusive because I'm not looking to flood the industry with some crazy stuff. So there'll be founders and other people in there. All right. Well, listen, like Chris said, the best thing to do now is just to get started. Pick a strategy and go with it. If you're unsure, set yourself a consult, meet with Thor, meet with myself, and get it going. I'm Max Farrell. This is Dex Effects Markets. We really do appreciate you hanging out with us today and talking about the Dex Atomic ATM system and the Dex Atomic system. We'll see you next time. And as always, trade well.